Have you ever considered what happens to your money after you deposit it? You trust your bank to keep it safe, but do you know how they truly use it? It's a world far more complex and, frankly, more profitable for them than most of us realize. The moment your funds enter their system, they become a tool in a sophisticated game. A game designed to generate massive returns for the institution, often at your expense. The most fundamental way banks make money is through a simple yet powerful mechanism: the interest rate spread. Imagine this. You deposit your hard-earned savings, and in return, the bank offers you a modest interest rate, perhaps a fraction of a percent. This is represented by the small token you receive for your trust. Simultaneously, the bank takes your deposit, bundles it with others, and lends it out to borrowers for mortgages, car loans, or business ventures. These borrowers, however, are charged a much higher interest rate. The difference between the low interest paid to you and the high interest collected from borrowers is the bank's core profit. It's a classic case of buying low and selling high, but the product is money itself, your money. Beyond the interest rate game, banks have perfected the art of generating revenue through a relentless fee machine. Have you ever scrutinized your bank statement? It's often a minefield of charges. There are monthly maintenance fees, just for the privilege of having an account. Use an ATM that isn't theirs? That'll be a fee. Overdraw your account even by a few dollars? Prepare for a steep overdraft fee, a penalty that can be disproportionately large compared to the actual overdraft amount. These charges, small and seemingly insignificant on their own, accumulate into a substantial stream of income for the bank. It's like a slow, constant drain on your resources, executed by invisible hands that reach directly into your wallet, siphoning off your wealth one small transaction at a time. Then, there's the seductive power of debt, most vividly embodied by the credit card. The bank offers you the convenience of instant purchasing power, a simple swipe that lets you have what you want right now. It feels liberating, but this convenience comes at a high price. If you don't pay off the balance in full each month, you're hit with staggering interest rates, often exceeding 20%. What began as a tool for convenience quickly transforms into a trap. You find yourself caught in a cycle of minimum payments that barely touch the principal, while the interest compounds, growing your debt exponentially. You become ensnared in a cage constructed from the very plastic that once promised freedom, a prisoner to the high-interest debt that fuels the bank's profits. In the end, the entire banking system can be viewed as an intricate game of strategy played on a grand chessboard. The bankers are the master players, and the pieces they move across the board are not made of wood or ivory. They are made of your money, your debt, and your financial future. They understand the rules with an intimacy that the average person does not, allowing them to maneuver and strategize for their own gain. It is their game after all, but it's your money. And the first step to changing the outcome is to know the rules.